Stellantis faces $2.7 billion loss, what it means for the future. Imagine a company that's home to some of the most iconic car brands in the world, including Jeep, Ram, and Fiat, yet is struggling to stay afloat. This is the harsh reality that Stellantis NV is facing, with a staggering $2.7 billion loss in the first half of this year. But here's where it gets even more intriguing. The company's woes can be attributed to a combination of factors, including tariffs imposed by President Donald Trump, restructuring efforts, and slow sales. As we delve into the details, you'll start to understand the complexity of the situation and the challenges that Stellantis is up against. The preliminary loss, which translates to €2.3 billion, is a clear indication that the company is still in recovery mode after a dismal 2024 that led to the ouster of its former CEO, Carlos Tavares. The results, which fell short of analysts' expectations, have sparked hopes that the new CEO, Antonio Filosa, is on the right track to turning things around. In fact, the company's shares in New York saw a 2% increase in early trading on Monday, which is a positive sign. However, the road to recovery won't be easy, especially considering the 6% decline in global vehicle shipments during the second quarter, with a whopping 25% drop in North America. The story behind these numbers is one of external headwinds, including tariffs, foreign exchange effects, and challenging macroeconomic conditions. Yet, despite these difficulties, Filosa remains optimistic, citing 6 months of meaningful progress compared to the second half of 2024. For the January to June period, Stellantis reported revenues of $86.7 billion, which is down from $92.2 billion a year ago, but higher than the second half of last year. The company also recorded $3.8 billion in pre-tax charges due to program cancellations, funds set aside for U.S. emissions penalties, and other restructuring costs. But here's the part that's likely to spark controversy. The company claims that President Trump's tariffs have cost it a whopping $350 million so far. This has led to a scramble to adapt to the higher levies, including pulling back imports from Europe and slashing production levels at plants in Canada and Mexico. The chief financial officer, Doug Osterman, had previously estimated that the U.S. tariffs would cost the company between $1 billion and $1.5 billion over the course of the year. As the company burns through $2.7 billion in cash during the first half, it's clear that the situation is dire. The automaker has released preliminary figures in the absence of financial guidance, which was suspended in April due to uncertainty around President Trump's tariffs. The full first half earnings details are expected to be released next week. So, what's the plan to turn things around? Executives are promising sales progress in the second half, including in the profit-rich United States, as key models like the new Jeep Cherokee SUV hit the market. The company is also reviving gas-powered models and variants due to less stringent emissions requirements under Trump. In the United States, Stellantis reported a 10% decline in sales during the second quarter, but the company saw progress with its highly profitable Jeep and Ram brands. Filosa is pointing to recent launches in Europe and the reintroduction of the Cherokee and Hemi V8 engine in the Ram 1500 in the United States as moves that will bear fruit in the coming months. However, the company has also made difficult decisions, such as discontinuing its hydrogen fuel cell technology development program. As Filosa urges employees to roll up our sleeves and release their energy and creativity, it's clear that the company is in for a long and challenging journey. But here's the question: can Stellantis really turn things around, and what will it take to get the company back on track? We'd love to hear your thoughts. Do you think the company's strategy is sound, or are there other factors at play that could make or break its chances of success? Let us know in the comments.